quarter?
Actually turned out better than we had expected. Search, YouTube, CapEx spending, GCP was good. CapEx spending got taken up, and for the right reason, right? Because demand was greater than supply, so they have to add more capacity. You know, what I think is interesting about Alphabet at this moment in time is that everyone had written them off as an AI loser.
Yeah.
And
maybe including you.
Including me. But things are moving so fast in this world of AI that companies have the ability to leapfrog and come back in the game, especially a company like Google. You look at Gemini 2.5, it's one of the better models on the market right now. AI overviews, it's a nice onboarding of AI for the general population. Like all of us use Perplexity or ChatGPT or Grok. The average person really lives on Google, and that AI overviews is an incredibly convenient onboarding. So they don't have to go find Perplexity.
So you think the sell-off, I call it the Eddie Q sell-off, right? The day that he suggested that for the first time ever, Google searches were down on their search engine. That was way overdone. Can you make that statement, or are you still concerned about where their role is relative to the large language models that are getting some market share that they once had?
Look, I think there's three issues that plagued Google: the DOJ, search, and whether or not they're an AI player.
Did you rank those in order of importance?
No, not necessarily. It was search. That would be search, DOJ, or AI, and then the DOJ.
Okay.
In that order. We'll know about the DOJ soon. I think they're becoming a player and proving that they can cross this chasm. And maybe they're a little slow, but they can catch up. And search is still an existential question for them. And how they're going to have to deal with search and protect that business, not sure.
You see $85 billion that they're spending. Does it make you love NVIDIA even more?
Yes.
It's your biggest position.
It is. I think what is very clear is that if you look at the amount of usage of AI, it's just exponential. I mean, I looked at my own usage a month ago, and it's a 30-fold increase in the last 8 months of number of tokens that I've used in just ChatGPT. And if you look at where we are in terms of adoption rates of AI, we're just starting with the general population. So, if we think about what's about to happen in terms of usage and the compute needed, we're at the very early stages.
You made me think of something as you're just saying that. How, as a portfolio manager, do you look at your own usage of searches and queries and whatever, and try not to make too big of an assumption that what you're doing, others are doing? You said in your own words, the general population, right, is still using Google search, but your own influences can influence the way you see certain stocks. Can you talk to me about that?
Sure. I mean,
because you reference it as a key data point. It's like, look, I'm using XYZ search large language model more so than I ever have. So that has to be coming from somewhere.
Yeah, so I think, look, human behavior is all similar, whether it's me or whether it's the general population. It's just maybe lagged. I mean, we are so tech focused in our industry that we're always trying to use what's best. I was an early adopter of Perplexity. I don't use Perplexity at all anymore, right? So, is that an early indicator for where Perplexity is going? I don't know.
Would you use it more if Apple bought it?
No, I think Apple should buy OpenAI, but.
Oh. Well, that'll take a mountain.
Well, really? I mean, if they pay, I don't know, $800 billion for it, it's 25% of their market cap. It's not so much of a mountain to cross the chasm.
You don't own Apple, though, right?
It's incredibly underweight.
What would make you raise it? If they did something like that?
Yeah.
Only OpenAI?
Well, I think, the market would cheer them buying or partnering with any of the LLMs. But what they really need to do is something a little bit more radical. I mean, what Meta is doing with all of the hires that they're making, that's a radical shift. This is a time for companies to start thinking radically and not incrementally.
So you don't care if they're spending a ton. You believe in the dream.
I believe in the dream.
Well, we'll leave it there. See if the dream comes true. Anka Crawford, thank you. All right. We're just getting some news related to Sarepta. Angelica Peebles joins us now with more. What do we know?
Hey, Scott, Sarepta shares are rebounding a little bit this afternoon, and that's after Endpoints is reporting that, speaking to a senior FDA official, an unidentified FDA official, that they are saying that Sarepta could make a change to the dosing or manufacturing of their gene therapy Elevidys. Remember, the FDA asked Sarepta to stop shipping that gene therapy just a few days ago, and all they would have to do is change the dosing or the manufacturing and test it on the next 10 to 12 boys and show that the liver-related issues were improved. Now, earlier, Endpoints had a headline saying that the FDA wanted to see a new study from Sarepta, so that obviously would take a long time, was the thinking, and that could be expensive. And now they're saying that it actually might not be as big of a barrier as originally thought, and so that might be why you're seeing some of that recovery. Just look at the stock. It's been all over the place. It is still down today, but less down than it was earlier, Scott.
All right. Angelica, thank you for the update. Angelica Peebles. Up next, right here at Post 9, is Ed Yardeni.
Plus.
S&P and NASDAQ hitting fresh intraday highs today. So how far can this record-setting rally run? Joining me now at Post 9 is Ed Yardeni of Yardeni Research. Nice to see you.
My pleasure.
I mean, just thing just keeps going and going and going.
It's
Is it going to continue to go?
It's a slow motion melt up.
It doesn't feel that slow anymore.
Well, on a day by day basis, but it's adding up to substantial gains clearly. And I think the market is coming around to a view I've had for a while, that the economy is resilient and it may not get a recession anytime soon.
Maybe so, but it may get a slowdown.
Well, it may get a slowdown, but not a recession. Bear markets are caused by recessions. Corrections are anticipating recessions and that don't happen. I don't think recession expectations are particularly high right now. I think the market is fairly confident that the consumer is going to continue to spend, and I agree with that. And capital spending has become less interest rate sensitive, and it's clearly driven by the technology sector, which I think continues to drive it.
When people say the market is expensive at 22 times, your reaction to that is what?
My reaction is, how long do you think this expansion is going to last? If you think it's going to last through the end of the decade, which I think it will, I'm not promising that there won't never be a recession again. But let's face it, the economy has demonstrated for the past 3.5 years that it's remarkably resilient. It's put up with a pandemic. It's put up with a rebound in inflation, the tightening of monetary policy, Russia invading Ukraine, and here we are.
Well, we flooded the zone with so much money at some point.
It is what it is, though. I mean, we did. And the money's still, and there's still an enormous amount of money out there. And by the way, one of the reasons the consumers continue to spend is baby boomers, people of my generation, have accumulated $80 trillion of net worth. And I'm not retiring, I'm still working for a living, but my friends are retiring and they're spending money. And meanwhile, their stock portfolios are going up, so they're happy.
What concerns you, if anything? Because you don't sound too concerned about anything.
No, I'm always concerned. You have to be concerned about things.
Well, what?
Clearly. Well, I mean, tariffs is still not a done deal. And we'll see what happens with the tariff situation, I guess, on August 1st. And we'll see what the economic implications are. I think there may be some pickup in inflation over the next few months. And I think, there clearly is this issue between the Trump administration and the Fed. I think that could give us some...
Well, I'll say.
Yeah.
Well, how much are you concerned about that? I mean, we're going to get this, as we said, almost unprecedented visit today from the president to the Federal Reserve building. Oh, you think it's extraordinary? Tell me more.
Well, it's extraordinary because it definitely signals that the administration on a daily basis wants to eliminate the Fed's independence. And people like Warsh have indicated that they think the Fed should be cooperating with the Treasury and that there should be an alliance between the two of them. But I think a lot of us would disagree with that. And we saw what happened when there was a rumor or just a discussion for like a nanosecond that Trump was going to fire Powell. The stock market took a dive and bond yields went up. I mean, at the end of last year, we saw the Fed lowering rates, and I said that didn't make any sense, and I predicted bond yields would go up. They went up 100 basis points.
Do you think they should cut this year?
I still think that they're none and done. I mean, that's been my
none and done.
None and done. That's been my position since the beginning of the year, and so far so good. But the year's not over. I think a lot of people are thinking about September, but I think we're going to get somewhat hotter inflation numbers. Look at initial claims. Initial claims might be indicating that the labor market might actually be strengthening, and the reason for that is if everybody just went through this agita about the tariffs, and we got through that with the market being at a record high.
I know, but you just said that you think we're going to get some hotter inflation numbers.
Yeah, moderate means that my thinking on tariffs and inflation is that they're not going to increase inflation. They're going to keep inflation from going down. In other words, inflation is going to be suddenly stuck around 3% instead of going down to 2%. That's kind of the way I'm looking at the impact of tariffs.
So 3% is the new 2%? I mean, is that...
Well, the Fed doesn't think so. I mean, the Fed's still sticking to 2%. I mean, as far as the administration is concerned, 3% is no big deal, and they should be lowering interest rates. But by the way, if they do lower interest rates, and this slow motion meltdown will become a very rapid melt-up, will become a very rapid melt-up.
Well, then you're going to be using the word euphoria again.
Euphoria, absolutely. Yeah. Yeah, I mean, the good news is earnings are actually doing quite well. Earnings expectations are rightly improving, and they're better than expected.
We'll leave it there, Ed. Thank you.
Thank you.
That's Ed Yardeni. Up next, we track the biggest movers in the close. Let's go back to Pippa for that. What do you see?
Hey, Scott. Well, two IPOs today going in opposite directions. The latest action from McGraw-Hill and Accelerant coming up next on Closing Bell.
Less than 15 to the bell. Let's get back to Pippa now for the stocks she's watching. What's at the top of your list right now?
Well, we're watching a pair of debuts on the NYSE today, starting with McGraw-Hill here, falling below its IPO price of $17 per share, pricing below the low end of its range, with the company raising about $415 million in its offering. The EdTech name had been owned by private equity since 2013. Accelerant, though, surging 28% in its first day of trading well above the $21 offer price, which was upsized. The insurance company now valued at $6.4 billion, with those shares up 31%. Scott?
Pippa, thank you very much for that. Pippa Stevens coming up. We'll tell you what's behind some serious weakness in the airlines today. The bell's coming right back after this.
here.
All right, coming up next, we'll run you through what to watch for when Intel reports in overtime. That's in the market zone, which is next. We're now in the closing bell market zone. We're just minutes away now from President Trump arriving at the Federal Reserve. Eamon Javers will have more on that in just a moment. Phil LeBeau's watching the airlines. Christina's looking ahead to Intel. But Eamon, we're going to start with you because the president just posted on social that he's on his way or he's about ready to head over there, and he's bringing a lot of backup with him, too.
Yeah, he's bringing a large group with him, Scott. The president posting this on social media just a short time ago. He says, getting ready to head over to the Fed to look at their now $3.1 billion plus construction project. Also present will be Fed Chair Jerome Powell, Senator Tim Scott, Senator Tom Tillis, OMB Director Russ Vought, Chairman of Fannie Mae and Freddie Mac, Bill Pulte, my appointees to the National Capital Planning Commission, James Blair and Will Scharf, and various other construction professionals. So we know that the reporters have been loaded into the motorcade. A very short motorcade from here at the White House over to the Fed. I do that drive every day in traffic. It's going to be a lot shorter for the president with no traffic, just a minute or two to get over there from here. And we expect to see the president on camera live as reporters get into position to capture those images of the president. And the big question all day today, Scott, has been whether or not we're going to see a handshake between Jay Powell and Donald Trump. And it looks like from the president's post here, he is expecting to see Powell in person, and we would expect that the pool cameras will catch that moment on camera. That's a fraught moment for Jay Powell after all of the criticism the president has unloaded on him in recent weeks and months, calling him every manner of insult, saying he's too late on interest rates, he's simply wrong, doesn't understand the economy. Powell insisting on the Fed's independence. Now Trump really focused on this cost overrun at the Federal Reserve headquarters building. And take a look at some of these pictures that were shot earlier today by reporters. There you see the iconic Fed building under construction. It is a huge multi-billion-dollar project. It has cost a lot more and money and taken a lot more time than a lot of people thought back when they began this process years ago. And the president's focused on that. His allies have said Powell must resign. They've accused Powell of lying about cost overruns here and suggested that this might be a for-cause reason why the president might be able to fire Jay Powell. The president has said he doesn't want to fire Powell. He'll be out of office soon enough anyway. So all of that drama will be behind the moment where we do or do not see that handshake between the two men coming up in just a couple minutes' time, Scott.
I mean, the only person who's arguably been as, if not more critical of Powell than the president, Bill Pulte. I mean, the fact that he's going, too, he's been on social every week blasting Powell, too. So that's going to be fascinating just to see the interaction that takes place in that way, too.
Yeah, I mean, Pulte has been, really, really aggressive, I would say, on social media toward Powell, really putting a stamp on that issue. And then, of course, the president's also bringing Will Scharf, who's now, he is appointed as the head of the National Capital Planning Commission. That's interesting because Will Scharf, if you see the president signing executive orders on a regular basis, the guy standing next to him who's handing the president the executive orders, that's Will Scharf, right? He's a very close aide to the president. The president's now put him in charge of the National Capital Planning Commission, which, of course, oversees all these historic renovations in the historic Capitol core. And that's an agency that will have a lot of influence over exactly how the Fed continues to do this project or doesn't continue to do it.
It's going to be, it's not unprecedented, obviously, because presidents past have gone to the building, but it's been about 20 years.
And the last time was for a swearing-in ceremony, right? George W. Bush went there for Ben Bernanke's swearing in, right? That was a very different subtext than what we have here, which is, open hostility between the White House and the Fed. The White House demanding that the Fed come to heel, the Fed chair resisting that demand. I mean, these are as high stakes as it gets, in global finance. And we're going to see it encapsulated in this walk around. We expect to see the president, touring the construction site. We do expect the president to make remarks on site. And so we'll hear from him.
All right, we'll see it all unfold in a matter of maybe seconds, if not minutes. Eamon, thank you. That's Eamon Javers. Bell's ringing us out in what has been a mixed picture today. The S&P Nas higher, extending their record gains. Dow and the Russell will be in the red, but I'll put it in overtime now.
Well, that's the end of regulation. The Autism Science Foundation and Wall Street rides for the ringing the closing bell at the New York Stock Exchange. Mega Fortune doing the honors at the Nasdaq. And we've got another record close on Wall Street, both for the S&P 500 and the Nasdaq. The Dow, however, snapping a 2-day win streak. Earnings fallout for 3 stocks that released results right here on Overtime yesterday. IBM is the biggest drag on the Dow after reporting disappointing software sales. Tesla sinking after missing on both the top and bottom lines due to a 16% decline in automotive revenue. And Chipotle, one of the biggest losers in the S&P 500 on declining same-store sales. Airline stocks also under a lot of pressure, grounded after American slashed its full-year profit forecast on weak demand, and Southwest missed earnings estimates. Plus, healthcare being dragged down by United Health after the insurance giant announced it is, quote, complying with formal criminal and civil requests related to the Justice Department's probe of its Medicare billing practices. Well, that's the scorecard on Wall Street. Welcome to Closing Bell Overtime. I'm Morgan Brennan, along with John Fort.
And chip stocks now set to take center stage when Intel reports earnings just moments from now. We're going to have instant reaction from a top semiconductor analyst. Plus, we get the outlook for the Hollywood box office when we speak exclusively with the CEO of IMAX. His company just beat earnings estimates and could be set for a blockbuster weekend with the release of the latest Marvel superhero movie. But first, we have breaking news as President Trump gets set to begin an unprecedented tour of the Fed this hour. And he just announced on social media that Chairman Jay Powell will be there with him. Our Eamon Javers has the details. Eamon.
John, that's right. According to reporters traveling with the president, his motorcade has just arrived at the Federal Reserve. We should be seeing those pictures momentarily. This comes at a moment of high drama between the two men. The president has been harshly critical of Jay Powell, suggesting that he has been too late on lowering interest rates, demanding that the Federal Reserve do what he wants in terms of interest rates around the world. The Fed clinging to its independence here. Jay Powell suggesting that he's not going to resign anytime before his term is up next spring. The president has said he's not going to fire Jay Powell, doesn't want to do that because he's got a limited amount of time left anyway. But this visit today, John, is all about putting political pressure on Jay Powell. The president's going to suggest that the cost overruns at the Fed's construction site, and we have some new pictures that came in earlier today of that construction site. Those cost overruns are Powell's fault, and Powell's mismanaged it. There is a suggestion in Washington that the president might use those cost overruns as a for-cause reason to fire Powell. That is, that he's mismanaged that, and that's reason enough to fire him. The president has said, for now at least, he doesn't want to fire Powell, but this visit will put a lot of pressure. We do expect to see Jay Powell here on camera with the President of the United States in a couple of moments. The President put out a post on Truth Social just a short time ago in which he said that he will be looking at this project and he will be visiting with Jay Powell. So watch for that handshake, watch for the body language. Really high stakes, really high drama here over the next couple of minutes as we watch this meeting play out, John.
All right. Eamon Javers, thank you. Well, Intel stock popping a bit, up a little better than 2% at the moment initially because earnings are out. Christina Partsinevelos has the numbers. Christina.
Thanks, John. Well, Intel reported revenue of $12.86 billion, a beat, with a loss per share of 10 cents. I'm not going to compare current quarter EPS or margins to estimates due to an $800 million non-cash charge. Intel had to write down some tools it can't reuse, which hurt profitability. Looking ahead, though, Q3 revenue guidance came in strong, the midpoint at $13.1 billion, which is above estimates, possibly helping the stock right now. Gross margins and earnings per share for Q3 were a little light. I did speak to Intel CFO David Zizner just about 20 minutes ago, who said the company has completed most of its planned job cuts to reach 75,000 employees by year end. But with headcount still at 96,000 at the end of Q2, more cuts are still occurring. As for other cost-saving efforts, Intel is canceling planned projects in Germany and Poland and then consolidating a plant in Costa Rica. Zizner says that will allow for more CapEx to be directed to the United States. And they also plan to be more conservative with foundry spending. As the CEO comments are going to come out, it's no more blank checks. I also asked Intel in regards to the 18A chip process, and it's the most advanced manufacturing technology. It's meant to rival the likes of TSMC. There were reports from Reuters it might be used only for Intel's own products. Zizner said that was always the intent, adding, quote, "We haven't made nearly as much progress as we had hoped with external customers. Still, Intel is ramping up 18A volume, while the next generation 14A process, also advanced, is showing better yields and is in a much better position to achieve customer success, according to Zizner." Back over to you.
All right, Christina, thank you. Now, looking at these Intel numbers, the revenue both for the quarter they just reported and the quarter that they're guiding to, revenue seems solid, but the EPS, a bit of a question. I know you said we're not comparing it, but I imagine this is going to raise questions about whether they're discounting chips, whether that plays into this at all, whether their margins are still on the trajectory that they were. They haven't been good because of not being able to load up the fabs. But and then how much the pull forward because of tariffs might play into this. Is that something we have to wait for on the call? Did Zizner say anything to you about that?
Yeah, so he did. So in regards to the gross margins, they came in a little bit light. He said that had to do with Lunar Lake, which is a particular chip. He said it's going to improve going forward. And then in regards to tariff pull-ins, remember in Q1 we did see that, and that contributed to the beat. I asked him specifically about that. He did say he saw it again, so there was some demand pull in because of the tariffs, but he didn't think that attributed, or that was the reason why revenue came in strong. So it's kind of the same case as last quarter as well.
All right, Christina Partsinevelos, thank you. Intel shares jumping around. We're now up, I should say, about 1% on those results. Well, let's get more on President Trump's visit to the Fed with Steve Leisman. Steve, your take on this, especially since we haven't had a president formally visit the Fed in almost 2 decades, and the last time that happened, it wasn't for political reasons.
No, it was back in 2006 when George W. Bush was there for the swearing in of Ben Bernanke. Before that, it was Gerald Ford for a similar reason. And before that, it was FDR opening up the central bank or one of its buildings in 1937. So this is a very different reason for the president to visit the Federal Reserve and meet with the Fed chair. Obviously, there are many out there who think this is simply political. This is something that the president is doing to distract from other things going on in Washington. For example, the Epstein case. For example, and as he wants to do that.
Well, I'm here just really with the chairman. He's showing us around, showing us the work. And so I don't want to get that. I don't want to be personal. I just would like to see it get finished. And in many ways, it's too bad it started. But it did start. And it's been under construction for a long time. It's going to be a real long time because it looks like it's got a long way to go.
Yes, sir.
So.
President, are there things the chairman can say to you today that would make you back off some of the earlier criticism?
Well, I'd love him to lower interest rates. Other than that, what can I tell you? The country is doing really well. I just briefed the chairman on the deal we made with Japan. Japan is putting up $550 billion in order to lower their tariffs a little bit. That way they have a little bit lower tariff. And they also opened their country to free trade, which nobody thought was even a possibility. And we get a zero tariff in the free trade. We don't pay tariffs, and they're going to pay 15% on everything they send into our country. So it's great. But they put up, as you could call it, seed money. Let's call it seed money. You could call it anything you want, but it's it's a total of $550 billion. So nobody thought any of that was possible, and it's wonderful. And we're doing pretty well with the European Union, likewise. And we have some others. They're all really big, and our country's going to make a lot of money. We would be helped if interest rates would come down, but we're going to see how the board rules on that soon. I'd love to see them come down a lot. But we have a country that's thriving. We had a dead country 1 year ago. Today we have the hottest country anywhere in the world. And we'll get this one finished.
Fed Chair Steve Leisman, want to bring you back in here. We had a bit of a dramatic moment there as the president and Senator Tim Scott, I believe, said that the cost of the Fed renovation had gone up to 3.1, maybe 3.2 billion. I believe it was around 2.5. And the Fed chair looked at the sheet of paper, looking concerned that the president handed him. He had been shaking his head no as the president had been saying that. And the Fed chair said, well, you added another building in here. Construction on that actually began 5 years ago. Not sure if you know which building they were talking about there or what that adds to the significance of this visit. But what was your take, Steve?
So I saw those same numbers earlier, and I did a double take on it. And I believe the chair is correct that what they did is they were adding in the cost of renovating the building across the street where the Fed moved in order to be able to renovate the buildings that it occupied, or one of the buildings that it occupied. It also took on a third building, apparently at the urging of the General Services Administration, as part of the renovation. So I think the chair was right about that it was including another building that I believe has already been completed. I'm not sure why it appears in the running costs of the Fed. Maybe Eamon Javers has some details on that. I know he was trying to suss that out earlier, that it looked like 3.1, but that was inclusive of a third building. I just think that, the moment is extraordinary where the reporter asked, what would it take for you to back off? And he said, lower interest rates. So there's that connection, John, straight, directly, unalloyed, unchanged in terms of saying, well, why am I doing this? I want the chair to lower rates, and then I might back off. Is the implication of that. It is really bizarre or extraordinary, I guess, for a president to be visiting a building, a government building in renovation that has a cost overrun, which I have watched this building under construction for many years and thought, well, there's just another government project that takes forever. I would hope if the president has interest, he could also visit the George Washington Bridge, which has been under construction for, it looks like, a decade now.
All right, Steve, stay right there, because for more on Trump's visit and the future of the Fed, let's bring in Roger Ferguson. He's former vice chairman of the Federal Reserve. He's also a CNBC contributor. Roger, it's great to have you on. The significance of the video we just saw, that interaction between the president and the Fed chair, your takeaway.
Well, look, let's be very clear. It has very little to do with the building. That is the cudgel that's being used right now to try to do something I think is very unwise. The president is trying to pressure the Federal Reserve, including the chairman, to lower rates at a time when I think the data don't support that. What is unusual here is not that there's this pressure, because it has happened many times in the past. What is unusual is how public it is, and I think it risks really undercutting the independence of the Fed, or the perception of independence, and I think that is not very helpful at all.
So, Roger, a number of folks have, in recent days, made what you could call a contrarian case, whether it's Mohamed El-Arian or it's Jeremy Siegel, because of the politicization or the optics of politicization here, that perhaps if the goal here is to maintain operational autonomy for the Fed or the optics of independence, that the best thing the Fed chair could do right now is to resign. Your reaction?
I disagree with that completely. I think the worst thing that Chair Powell could do at this stage is resign, because it would obviously be a political move. It would obviously be in response to the pressure from the president. It would be the opposite of proving independence. I think the best thing that Chair Powell can do, and the best thing the FOMC can do when they meet next week, is to make decisions based on the incoming data, changing outlook as they see it, and articulate whatever the underlying rationale is. I would expect them to keep rates on hold and maintain a wait-and-see posture, because there's so much uncertainty. And to do anything other than that, I think, would be inappropriate at this stage.
Steve Leisman, give me your take on the significance of this moment in the history of the Fed and sort of what happens perhaps from here. The president has made the argument that the Fed is political. Some other people have said that as well. David Zervos has said that here on Overtime, and that the Fed isn't lowering interest rates perhaps for political reasons. But at the same time, what we just saw, the stagecraft with the hard hats, and then, taking out the paper and saying the cost overruns are worse and that this is really about construction. But no, it's not. The Fed seems to be getting pulled into a political atmosphere, even as it tries to assert independence. Is it possible to get this rabbit back in the hat? Will the Fed ever be arguably completely independent again if it has to deal with this sort of political tug of war?
So there's something that I sort of like about Donald Trump, in the sense that the way he pushes every institution to the limit, and to find out how strong it actually is. And we are at a moment now where we are going to find out just how strong, how secure, how independent the Federal Reserve is from political pressure. Not because the president made a couple tweets, not because that he took a Fed chair, as Roger said, as happened in the past, in the back room and yelled at him, but because he has created a public assault on the Federal Reserve and made a huge issue out of a building renovation. And we will find out, John, what is the deal? How independent is the Fed? I think if it survives this, it emerges very strong, and we'll see. I just want to make one comment about something the president said in front of the Fed chair. He said the economy is doing great, and he used the word hot. That's an inadvisable word, I would say, for the president to use to the Fed chair. You got a hot economy. I think that's a reason why the Fed may not be so interested in cutting rates. Look at jobless claims this morning, 217,000. The unemployment rate, 4.1%. We're going to do pretty good on GDP growth in the second quarter. I guess we get that next week. And other things are doing pretty well. The stock market hitting new records. And by the way, this whole big to-do about should the Fed cut rates. The Fed has 2 cuts dialed in, just not in July. And I should think that the economy is strong enough, the president would be even confident enough in the economy and the legislation that he has shepherded through to think that a Fed that cuts a quarter point in September is not that consequential versus doing it in July.
Okay, Roger Ferguson, last word to you. Given all that our Steve Leisman just said, this could come down to the Supreme Court. No, we've had some indication from the court that there are limits to a president's powers to fire, and perhaps those limits begin at the Fed's door.
Look, the Supreme Court was pretty clear that, at least with respect to the Fed, the president's powers are maybe more limited than for other places. There's still this question of for cause. So while this may come down to the law, I think at the end of the day, it comes down to markets, and it comes down to the points that Steve was making, which is, the current incoming data does not support the concept of a cut. The president should be relishing his strong economy, which does not call for a cut. And the final point is, if the Fed were to cut rates inappropriately now, it is going to make the cost of borrowing for the United States higher, not lower, as markets build in greater inflation expectations. So I think at the end of the day, the Supreme Court may have a statement in this, but the markets, I think, will dictate what needs to happen. And I have a high degree of confidence that Chairman Powell and his colleagues will stand firm, do what is right, and come out of this showing that they are prepared to serve the U.S. people and the economy and their mission, not knuckle under to political pressure that's being applied so publicly at this stage.
Roger, finally, I just want to get one more question on the markets piece of this, because there is that concern out there that you could see a debt spiral, and obviously it's costing more at higher rates to service that debt. And this has been part of the argument from the president in recent weeks. So how do you counter that?
Look, I think the president saying that the Fed should lower rates is, I think, misunderstanding a little bit of the way the market would work. What the Fed controls is the short end of the yield curve. They may, at the right point, lower rates if, in fact, inflation is under control and the economy appears to be slowing. That may lead to longer rates coming down if the market agrees with the Fed. If the market assumes that there's going to be greater inflation than maybe the Fed does, or they think the Fed is cut inappropriately, they're going to expect out at the longer end of the curve, 10-year, 30-year, et cetera, higher interest rates, not lower rates. And so I think the president should be very careful what he asks for. I think the Fed is unlikely to agree unless the data support it. And only if the data support lowering rates will the market go along with it. And so at the end of the day, the economy will dictate what needs to be done, and that's what we need to do.
All right. Roger Ferguson, former vice chair at the Federal Reserve. Thank you. Our own Steve Leisman, thank you as well. Up next, we'll get reaction to Intel's results from an analyst with a hold rating and find out what he wants to hear from management on the call at the top of the hour. Overtime's back in 2.
of the Parliament of Canada, the heart of our democratic engagement with people. And this morning I offer my deep concern, solidarity, and prayers with the people of California who are out in the streets unarmed defending the rule of law against illegal kidnapping and deportation, and they're being faced down by the military might of the United States Marines. We're not talking about creeping fascism here. This is full-on police state tyranny from the gangster president Donald Trump. And this is the man who will soon be crossing our border to attend the G7 meetings in Canada. I have received hundreds of messages of concern and outrage from Canadians that a convicted felon, sexual predator, and a man who has threatened our nation's sovereignty.
The Epstein files that have already been released show that Trump is all over the files. He's in multiple pictures with Jeffrey Epstein. There's multiple videos of Trump with Jeffrey Epstein. There are plane logs of Trump on Epstein's plane. There are statements by Trump about Epstein. There are court pleadings of alleged victims of Epstein naming Trump. So we need to have these Epstein files released.
Nobody can dispute the fact that we need. Oh yeah.
Good morning. I am here in the press gallery of the Parliament.
The EPS was hit there. They took some charges in the quarter. They've got some tools. They've just got too much equipment. They're writing it down. X the charges. It was actually a pretty good beat in the quarter. The guide is a little strange. So the revenue guide is actually quite good. The gross margin guide is light. I suspect that it's either mix or probably more outsourcing that's driving that, but the gross margin's light. The EPS guide is below, even on a revenue guide that's pretty strong. They're making some other operational changes. So they're cutting OPEX and CAPEX. The targets for this year are still the same as they were last quarter, but looks like those are set. And they're delaying some future projects. So they've canceled, looks like, the Germany project and the Poland project. They're closing down their Costa Rica backend facility. And they're delaying their Ohio plans further. So that has implications. I think investors will want to know, maybe for some other stocks, like what are their CAPEX plans like for next year? But overall, I would say like it's a mixed print around this. It's a little messy. At a minimum, the revenue outlook for now, we'll see how sustainable that is. People worried about pull forward and everything, but for now, the revenue outlook at least looks pretty decent.
So what is the next potential landmark catalyst for the people who are trying to see, is there a point at which we can buy this stock? What would be the proof point from Lip Bhutan and from Intel to say, okay, well, maybe this turnaround is coming on apace?
Yeah, no, it really probably is around the next generation processes. And so again, 18A is supposed to be launching and ramping at the end of the year. Again, their margin guidance to me suggests that they're doing more outsourcing. So we'll see how that outsourcing versus internal manufacturing goes. But it clearly is the process roadmap. 18A, attracting foundry customers, I guess eventually like ramping 14A. There's been a lot of question of whether or not those processes are viable. I would say at least in the slide deck, I think it's on page 5, they still have the logos for 18A and 18AP and 14A on the page at least. So at this point, I guess those processes are still there, but investors are really going to want to know how successful those are going to be. Like, what does that volume look like as it ramps? And then can they attract any customers? Those are probably like the structural proof points above and beyond just, is revenue good or is it bad? Because right now we don't know how sustainable or not sustainable that would be.
All right, for sure. Stacey Raskin, thank you.
You bet.
Well, there's an urge to merge in the railroad industry. Up next, the CEO of CSX on whether merger talks between Union and Pacific and Norfolk Southern will force him to consider a deal of his own. Stay with us. Welcome back to Overtime. A transcontinental railroad. That's the vision for Union Pacific, as it confirmed with Norfolk Southern today that the two are, quote, engaged in advanced discussions to merge. The talks could still collapse, but the possibility of consolidation triggering reports that Berkshire Hathaway's BNSF could look to buy CSX too as well if a merger between UP and NS materializes. Now, I spoke exclusively with CSX CEO Joe Hinrichs earlier, and he said no comment on whether CSX is in talks with BNSF, but I also asked about the risk that regulators could say no to consolidation across the industry.
There are definitely, requirements to be met on any kind of consolidation, and the STB has been very clear on that. They've not been tested, so it's going to be a long process if in fact it does start to materialize. Let's be clear, other major stakeholders will have a big voice in all this, whether it's the unions, whether it's customers, other parts of the ecosystem in rail, and we're proud of the relationship we have with all of those different constituencies in the rail.
Now, the last big merger, which was Kansas City and Canadian Pacific, which closed back in 2023, if that's any indicator, any deal could take years, and we'll see those, quote, stakeholders, not just the regulators at the Surface Transportation Board, weighing in along the way. Now, CSX, which reported better than expected earnings right here on Overtime yesterday, also offering insights on the economy.
It's a mixed bag. There's strengths in some areas like construction. The ag business has been strong, Midwestern crop. Coal volumes are still strong. Met coal prices are down significantly. But also intermodal business has been up and down, but it's up, very much for the year. But autos, housing, some of the paper, pulpboard, stuff tied to interest rates are still under pressure. And so there's still potential for this economy to grow if we can get some of that going.
All right. Well, Hinrichs noting, quote, ebbs and flows in port activity tied to tariffs, but also said he's bullish over the next few years on industrial development, especially as the bonus depreciation in the tax bill helps to enable that.
So now I believe the president is set to speak again. Is he speaking? Let's get back to the president.
If you remember, not so long ago, we rebuilt the old post office into the Trump Hotel, and we sold it to Waldorf Astoria. And it was a great success, and we had great luck with the building. We did a good job. We built it quickly and relatively inexpensively for about $200 million. And that was a big hotel, big project. But we looked around, and Tim Scott's here someplace. Tim, come on up. You saw what we saw. And the big thing is to get it done. They have to get it done. They have to get it finished. And very importantly, we have to get interest rates lowered in our country. Our country is the hottest in the world right now, but the one section, people are pretty much unable to buy housing because the interest rates are too high. We have no inflation. We have a lot of cash coming in. The tariffs have been unbelievable now. People that didn't even believe in tariffs are saying what a great move that was. We have hundreds of billions of dollars coming in. Japan, just on one deal, is paying us $550 billion. And they opened up their economy. It's incredible, the deal. And they're happy. We're happy. Everybody's happy. But we should have the lowest interest rate of any country, and we don't. We should have. Every point is worth $365 billion. So we want to get the rates down, but we also want to get the Fed building finished. So I met with the contractors. We toured it with the chairman, and we had a very good tour, and we'll talk to you about it sometime. But Tim and I, we sort of understand what happened.
Yeah. Too expensive. Bottom line is this, that Americans deserve to become first-time home buyers. President Trump has created the best economy in the world. The one thing that would make it better is lower interest rates. Full employment is even more possible. Wages rise faster as interest rates come down when your employment is at 4.1% because of your leadership. We have revenues coming in at record-breaking, maybe last month even more revenue coming in than bills going out, which is remarkable.
They found $26 billion. They said, where did that come from? Nobody, I think that's been many decades since that happened.
I can't remember that.
They found $26 billion last month, and they said, where did that come from? I said, why don't you try the tariffs? Said it was true. We're taking in hundreds of billions of dollars, and our country is doing great, and we have no inflation, and the numbers, the job, everything is good. The one thing we have to do is get housing prices down and the interest rates down so people can buy the house, because they're all making money, but they can't get the interest rate down. We have to.
Amen.
All right. And he's been my friend for a long time.
On a number of construction sites, did you see mismanagement going on or funds that aren't?
Well, I see a very luxurious situation taking place. Let's put it that way. And I was given a very nice tour by the head of construction. And, look, if you look over here, they're trying to open up the basement. When you open up a basement, first of all, it's the worst space. Always a basement is the worst space in a building. And it's also the most expensive space to build. And especially here because you have a water line. They're going down into the water, so they have to build what's called a reverse bathtub. The water has to be kept out. It's very expensive construction. So it would have been good if they didn't build it. Would have been good if they didn't do certain other things. If you look at the kind of protection in the hall, have you been able to get in the hall? You saw the protection of plywood. I mean, that was a lot of money just to protect it for a period of time. I would have done it very gingerly and easily and not have to spend, millions of dollars on protection. And there are things that could have been different. Look, there's always Monday morning quarterbacks. I don't want to be that. I want to help them get it finished. It's been going on for years, and I want to help them get it finished. And what we really want to do, and I think I can speak for Tim, and I think I can speak for the entire Senate, we can speak for everybody, frankly, is we want to see interest rates come down. Our country is booming, and the interest rates is a final little notch. And if you look at Europe, they've lowered 11 times in a short period of time. We've lowered 0. And, they are competition, although we're in the process of probably making a very good deal with them, too. They want to make a deal very badly. So we're making a deal. We just completed our deal with Indonesia. We just completed our deal with the Philippines. We're making unbelievable deals, and the money is pouring in. We want to get interest rates down.
But on interest rates, at some point, does the level of interest rates now slow economic growth?
Yeah, it never helps it if it's high. Never helps it. Well, it's already as good as we're doing. Think of how well we'd be doing. We'd be like a rocket ship. As good as we're doing, we'd do better if we had lower interest rates. And we should. We're prime. Don't forget, without us, the whole world collapses. So we should have the lowest interest rate because, you can talk about Switzerland, you can talk about wonderful countries, no debt, but without us, everything collapses. We should have the lowest interest rate. And if you took it down 3 points, not a little bit, but 3 points, if you got us down to 1, we would save more than $1 trillion, basically with just a paper transfer. You wouldn't be cutting costs of anything. You wouldn't be building anything. Just a move of the hand saying we're going to lower interest rates. You would save $1 trillion a year. And there's nothing you can do to save that kind of money. So
the Fed Chairman say why he's not lowering interest rates?
And a little talk about it, and I thought it was a very productive talk. He'll be able to tell you at his next meeting, but I will say that he did say the country's doing really well.
Mr. President, how would you describe your talk with him? Would you say that the energy was tense? Did you come to any agreements with him?
No, I thought we had a good meeting. No, there was no tension. There was no tension. I think he had more tension with my great senator to the right. He's a pretty tough cookie. He was, you might say, well.
Listen, bottom line is we had an honest, candid conversation about some of the overruns at this building. We had it in my banking committee, and he said we were wrong, and turns out we were right. Thank God President Trump and his team took enough time to dig into some of the details, and the details are clear. We need to get this project done. We would like to keep it where it is or a little lower, but at the end of the day, the point is that instead of talking about interest rates, instead of talking about first-time home buyers, instead of talking about the heat in our economy, that's a good thing, we're talking about an overrun on the Federal Reserve building as opposed to the Federal Reserve objective of lowering and keeping our economy full.
As an example, they built parking spots under a building next door.
Really expensive.
That's very expensive. When you're starting to build parking lots, underground parking lots, that's a very expensive thing. A lot of people I know, they park their car and they walk a block or 2 blocks or something. But it is a very expensive thing. But that is what it is, and that's okay.
Is this project a fireable offense? Is this project a fireable offense for Jerome Powell?
Look, I would love to see it completed. I don't want to put that in this category. It's a very complex thing that could have been made simple. I built a great hotel, and the great hotel that everybody in this group knows very well, it's called the Old Post Office, and It's a much bigger project than this, and I spent $200 million building it. And it was taken down to the steel, for the most part, taken down. You know, you've seen it go up. And I built it quickly, and I built it for $200 million. That was a much bigger job than this. Spent $200 million, and it's got marble bathrooms, the top fixtures, the best of everything, all brand new. So, you know, this is a very expensive job. I don't know. It got out of control. And that happens. That happens. It's a shame.
Are you negotiating on auto
I
tariffs?
built it quickly, and I built it for $200 million. That was a much bigger job than this. Spent $200 million, and it's got marble bathrooms, the top fixtures, the best of everything, all brand new. So, you know, this is a very expensive job. I don't know. It got out of control. And that happens. That happens. It's a shame.
Are you negotiating on auto tariffs? Your auto tariffs.
No, I'm not negotiating on auto tariffs.
Does EU looking at 15% like Japan?
Well, it depends. What Japan did is they brought down their tariffs. They gave us $550 billion because they didn't want to pay 20. They were 28%. And they gave us $550 billion up front. 100%, 500. We get 90, they get 10. 90%, they get 10. And there's no payment. It's not a loan or anything. It's a signing bonus, I call it. But they gave us $550 billion and took down the tariffs a little bit. And then they agreed to open their economy to everybody. This was not easy. This took, you know, a lot of people walked out of rooms and things. Sometimes they walked out of rooms, went back to Japan. Right. I said, where are they? They went back to Japan, and then they called and they said, could we make a deal? They came back a couple of times. This happened. This was, as you know, it was over a period of months, and ultimately they agreed to open their economy. Now, the opening of the economy is worth more than $550 billion, the payment that they made. It's worth more. So between that and the payment, we reduced it down to 15%, but they were at about 28%, and then they bought it down, basically.
But could other countries buy it down?
Yeah, I would let other countries buy it down, sure.
Mr. President, do you feel better or worse about your relationship with the Fed chairman after this meeting?
I feel good about it. I mean, look, I have one dispute, and the dispute is there could be some things with money and, you know, where it comes from, how it's come from, how it's printed, where it's printed, all of the standard things with the Fed. But I just want to see one thing happen. Very simple. Interest rates have to come down. If the interest rates don't come down, we're knocking it out of the park with high interest rates. If interest rates come down, then that final little element kicks in. That's housing. And the sad part is that people, wonderful young people, young couples starting off, they can't get a mortgage because the rates are too high. Tim knows that better than anybody, I think.
But Mr. President, if the rates are hurting families in the country, why let that keep going for another 8 months? Why not just fire the
Because to do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing. The fact is, it's so big what's taking place in America, where the king of Saudi Arabia says you have the hottest country anywhere in the world, and I thought you were dead 1 year ago. I thought we were dead. I just left NATO, as you know. They're agreeing to pay 5%. We're not paying anything. We send them they pay for 100% of everything now for the war, Ukraine. But I just left NATO, and every one of those leaders said, every country, they said, and very smart countries, very successful countries, frankly, and every one of them said you have the hottest country in the world. We did that over a period of a year, less than a year. I mean, if you think, they say a year ago we were dead, and today, so I'm here 6 months, and we did it over, and we had the help of men like this and people like standing right behind me. They're great. Matters. They're great professionals. They really are. They're great professionals, and in a short period of time, we made it the hottest country in the world. With all of that being said, we'd like to see, we can always do better, and we can do better if interest rates come down. Right? Good job you do. You do a nice job. I watch you a lot.
Thank you. I appreciate that, Mr. President. Do you have a name in mind to replace the chairman?
I do.
Or one person?
2 people. Maybe 3.
Any clues?
I'd pick him, but I think he's not leaving the Senate.
No, sir, I'm not.
I'd pick Tim.
Thank you.
No, there's no pressure. No. We want to have, his term comes up soon. I think he's going to do the right thing. Everybody knows what the right thing is. Even people that believed in, the higher rates are all
on board. They all want to see the interest rates come down. It's very important.
Mr. President, if he doesn't do the right thing and cut interest rates, as he said, would you then consider?
I don't think we're going to do that. I don't think so.
Investigate the newly declassified documents like ever.
Yeah, that's a terrible thing. I have great respect for Tulsi and the documents they found on President Obama. Frankly, it was an Obama thing, but it was the people that worked under him also working with him. And no, it's a very, very serious thing. Thank you very much.
Thank you, Mr. President.
Thank you, everybody.
That is President Trump leaving the Federal Reserve building after what he called a, quote, good tour and a, quote, good meeting with Fed Chair Powell. He was flanked there as he answered reporter questions by Senator Tim Scott, the chair of the Senate Banking Committee. A lot of talk about lower interest rates and focus on housing rates and the cost to service debt, and some trade talk as well. So let's go back to Eamon Javers at the White House for more on what we just heard and the significance of this moment. Eamon.
Yeah, Morgan, dramatic video there coming out of this visit. I mean, the video of Trump and Powell side by side, and Powell sort of nodding or shaking his head in disagreement with the president over the total cost of the project, arguing about whether the third building should be considered as part of the project or something separate. I mean, that was dramatic, confrontational stuff that we don't really get to see. That stuff is usually kept behind the scenes. In this case, we saw it on live television. But despite the drama of the moment, Morgan, I would say this. I think what you actually saw here, as provocative as this visit to the Fed is the president backing off of Jay Powell. He was asked at one point there by one of the reporters in that impromptu scrum, do you consider the cost overruns here a fireable offense to Jay Powell? He said, no, I wouldn't put it in that category. He refused to take the bait several times in that press scrum in terms of calling for either Powell to resign or saying he was going to fire Powell. I think that's a sign that this president has, at least for now, made up his mind not to move forward with an attempt to fire Powell. As he said in the past, Powell is out in the spring anyway, so he can simply move forward with considering his options. He said he has 2 or maybe 3 people that are in mind for Fed chair. We've seen all those names listed in the media over the past couple of days. Clearly, this president is actually, as provocative as this seemed to me to be a president who's backing off of some of those criticisms of Powell.
Eamon, that is what the president said verbally, but visually it seemed to me he was communicating something different with the hard hats, with him putting forth his expertise as being someone who's done a lot of construction, including at the old post office, with him bringing in Senator Tim Scott. And Senator Scott appeared to play bad cop here and be the one who was more verbally direct in attacking Powell this time around, even though the president is saying he's not looking to get Fed Chair Powell out of the way. He's certainly making a case that the rest of the nation should want the Fed chair to do what he wants him to do. I know the president said that, all the economists, everybody agrees that we should have low rates. That's not the case from here on CNBC. Certainly everyone does not agree about that. So it appears that perhaps the president is playing this both ways to me. I don't know. What do you think about that?
Yeah, no question, John. The optics are embarrassing for the Fed. They're embarrassing for Jay Powell because it suggests that Powell is somehow responsible for these cost overruns. Now, you can debate that. You can go back through the documents for years. What was Powell's exact role? What did he push for? What did he not push for? How much of this overrun can be, laid at his feet versus other people who are his predecessors or other people in the building? That's a debate for later. The optics do suggest that the president is blaming Powell for this embarrassing cost overrun. So to that extent, you're right. It is pressure. It is pouring on some of the embarrassment factor on Jay Powell. There is sort of a subtle power play, maybe not so subtle, a power play here between the president and the Fed chair. The president showing up in his motorcade with the Secret Service and the press pool and going live on television to expose something that he thinks is embarrassing about the Fed. So all of that, you're right. I'm just saying that in terms of the rhetoric about calling for Powell to resign or to be fired, the president seems to have backed off that piece of it and was really eager not to take that bait here. And side by side with Powell said, I'm not going to get into it. I'm not going to make it personal.
All right. Reminds me a bit of Mark Antony's speech in Shakespeare's Julius Caesar. Eamon Javers, thank you. More overtime after this.